Imagine a river carving its path through a mountain range. Water flows effortlessly, finding the path of least resistance. This is the essence of the Dao, the natural order of things. In the Dao of Capital, we explore how this ancient philosophy applies to the modern world of finance. Part 1 unveiled the invisible forces that shape markets, much like the river's current. We learned that capital, like water, seeks the path of least resistance, flowing towards opportunities for growth and profit. It's not always about brute force, but about understanding the natural flow of the market. We discovered that government interventions, like dams in a river, can disrupt the natural flow of capital. These interventions, while well-intentioned, often create unintended consequences, distorting market signals and hindering sustainable growth. The Dao of Capital reminds us that markets are complex, adaptive systems. Trying to control them completely is like trying to control the weather. Instead, we must learn to anticipate, adapt, and harness the power of these systems to our advantage. Time, friends, is the most precious commodity. More precious than gold, more valuable than diamonds. Because time once spent is gone forever. In the bustling marketplace, we often overlook the silent partner in every transaction, time, yet understanding its value is crucial to navigating the Dao of Capital. This brings us to the Austrian School of Economics and its emphasis on time preference. Time preference is a simple concept. We value goods and services available now more than those available in the future. Think of it like this. A delicious meal today is more satisfying than the promise of a meal a year from now. This preference for immediate gratification influences our financial decisions. We demand a premium and interest rate to delay our gratification and lend our resources. The higher the time preference, the higher the interest rate demanded. Now let's talk about roundabout methods of production. Sounds complicated? It's not. It's simply the idea that by employing a series of steps, we can increase our productivity and ultimately our prosperity. Imagine you're a fisherman. You could try to catch fish with your bare hands. That's the direct approach. Or you could invest time and resources to build a fishing rod and net. That's the roundabout method. The roundabout method may seem less efficient at first, but it ultimately leads to greater returns. By investing in tools and technology, we increase our capacity to produce, ultimately creating more wealth over time. This principle applies not just to fishing, but to all forms of production. Think about the modern smartphone. It's the result of countless roundabout processes, each adding value and sophistication to the final product. Section 4, Austrian Insights, Navigating Modern Financial Waters. The Austrian school, with its focus on time preference and roundabout methods, provides valuable insights for navigating today's complex financial landscape. In a world of instant gratification and short-term thinking, these principles remind us of the importance of patience, long-term planning, and sound investment strategies. Consider the dot-com bubble of the late 1990s. Investors caught up in the hype poured money into internet companies with no clear path to profitability. The bubble burst, wiping out trillions of dollars in wealth. This episode highlights the dangers of ignoring the principles of time preference and roundabout production. Sustainable wealth creation requires a long-term perspective, a willingness to delay gratification, and a focus on building businesses with solid fundamentals. The Austrian school's emphasis on sound money, free markets, and individual liberty provides a framework for understanding the complexities of today's globalized economy. Section 5. The time value of money, seeds of tomorrow planted today. Time, as we've established, is a currency, and like any currency, it has value. This brings us to the concept of the time value of money. $1 today is worth more than $1 tomorrow. Why? Because that dollar invested wisely has the potential to grow over time. This is the power of compounding, earning interest on your initial investment and on the accumulated interest. Imagine planting a seed. You don't expect a tree to grow overnight. It takes time, nourishment, and patience. Investing is similar. It's about planting seeds of capital today that have the potential to grow into substantial wealth over time. The earlier you plant those seeds, the more time they have to grow. This is why starting early is crucial when it comes to investing.